Good morning, everyone. Welcome to another RF Crypto video. Today's markets have gone down by almost 3.5%. We see the global crypto market cap now standing at around 2.09 trillion. We know that last week it was around almost 2.2 trillion, and this signifies quite a significant decrease, but it's nothing to worry about. It's consolidation going on. It's some market news that have caused the prices to go down, but they tend to stabilize, and Bitcoin hasn't moved below its support level, which is a good sign. The price is surviving downwards pressures. Bitcoin is down by 2.71%. As always, Ethereum has overreacted. It's down by 4.64%, while the general crypto market is down by 3.41%. BNB down by 2.95%. Dogecoin is up by 6%, and I think we all know why. I'll speak about this a little bit later, but it has to do with Elon Musk and Twitter, basically. Shiba Inu down by 2.25%. So the whole market is basically in the red, except for a few coins. And now having a look at the Bitcoin charts, we can see that ever since the 31st of March, the price has been trading laterally between the $45,000 and $47,000 levels. $45,000 being the support level and $47,000 being the resistance level. It was trading in the upper band, so closer to the resistance level, but then yesterday we saw a massive red candle followed by a smaller green candle, whereby the bulls tried to undo this red candle, but they couldn't survive, and bears got hold of the market. Markets went down even to below the $45,000 support level, and I thought that it would keep going down up to $42,000. However, we were saved by the bulls, and the traders started buying up, and the prices went above the $45,000 support level, stabilizing, and now it's trading laterally between $45,000 and $47,000, although it's closer to the $45,000 level. Bitcoin slumps to $45,000 amid hawkish Fed, and buying activity remains positive. So although there was some negative news, or I wouldn't say negative news, but non-favorable news for crypto, buying activity still remains quite high, which is great for crypto. So the fall in the price came amid a global sell-off driven by hawkish comments from the US Federal Reserve Fed Governor Lael Brainard, who said that curbing inflation was of paramount importance in the United States, which hints at a trimming of the central bank's balance sheet in May. So during the pandemic, the Federal Reserve tried to stimulate the economy by injecting cash into the economy. First of all, they lowered interest rates, and then after that, they started injecting cash by buying securities from the markets and paying for them by cash. So when the Fed buys securities and notes from the markets, it increases their balance sheets. And this went up by a significant amount. And now, because inflation is so high, they want to remove money from the markets. They want to ease the pressure on prices. So they've already increased interest rates, and they've already started decreasing their balance sheet. So what they're doing is that they're selling these assets and notes back to the market, and they're getting cash for it. So that's cash leaving the market, and that's a strategy to curb inflation. But on the other hand, it leads to lower economic activity because there is less money flowing around in the market. If there's less money flowing around in the market, there is less opportunities for that money to be used in investments. And naturally, when that's the case, economic activity slows down, economic growth slows down, and the markets go from growing at a certain high level to its growth decreasing by almost half. And because they hinted at the trimming of the central bank's balance sheet, this led to a sell-off in the market as investors feared a restrictive environment could lead to an economic downturn, as I just explained now. But economic downturn is a bit exaggerated because the US's economy is quite robust. It's in a good position. Unemployment is at all-time lows. Economic activity is quite high. The economic growth rate is higher than expected, which means that they can afford to increase interest rates and trim their balance sheets without leading to a recession. Not only did the crypto markets go down, but the S&P went down by 1.26%, while Nasdaq, which is technology heavy and is usually more risky, dropped by 2.26%. And we have before ascertained that the crypto market follows the normal market, specifically Nasdaq, because they're both high tech. So Nasdaq dropped, meaning that crypto dropped following that. And we saw from the list of crypto prices that weaknesses in the top cryptocurrency led to a broader fall in the crypto market. What this means is because Bitcoin decreased, because Ethereum decreased, all the other coins in the market followed it. However, one coin that is overperforming the market is Dogecoin. It was the only gainer among the majors, which was kept up by the optimism around Elon Musk's appointment to the board of social media platform Twitter, which is being viewed as a positive sign for the meme coin. Elon Musk bought over 9% of Twitter stock, which makes him the biggest shareholder in Twitter at the moment. And we all know that Elon Musk is a big backer of Dogecoin. And because he's now in the board of Twitter, people are thinking, hey, maybe Twitter is going to implement Dogecoin for payments of tips or for payments of subscriptions or for whatever it may be, because Elon Musk has always backed this meme coin. Also, data shows that crypto exchanges saw significant cryptocurrency outflows, with the likes of Bitcoin seeing outflows of nearly 96,000 Bitcoin each month. And such activities signaled historical strong accumulation was taking place. And basically what this means is that cryptocurrency is flowing out of exchanges like Bytes, Coinbase, and all those exchanges, and people are taking those and placing them in their hot wallets or cold wallets in order to store them for the long term. So they're hodling, expecting the price to go up. And when this happens, when there's strong accumulation, when there's strong cryptocurrency outflows from exchanges, it's a bullish sign because people believe that the price of Bitcoin is going to rise, and that's why they're hodling. On other news, Visa should be scared. Lightning Labs raises $70 million to add stablecoins. So the Bitcoin software firm Lightning Labs has secured a large funding round to enable and further develop the Lightning Network for faster and cheaper Bitcoin and stablecoin transactions. So what the Lightning Network is a layer 2 solution for Bitcoin, which enables instantaneous transfer of Bitcoin from one address to another at extremely low fees. So if you want to pay for a cup of coffee in a coffee shop, for example, in El Salvador, you have a Lightning Network app, you go into the coffee shop, you use that app in order to pay for your coffee, as opposed to the normal Bitcoin Layer 1 solution, which takes about 10 minutes for transaction to process. With the Lightning Network, as soon as you press the button to pay the coffee shop, the Bitcoin transfers instantaneously. It leaves your wallet instantaneously, and it reflects in the coffee shop's wallet instantaneously as well. And this is using extremely low fees, like I'm talking about cents to the dollar. This $70 million will be channeled into a new protocol it has developed that is called Taro. It will enable stablecoins to be transferred using the Lightning Network for the first time ever. Lightning Labs will not issue stablecoins, but the infrastructure will allow them to be sent over the network. And this is a very big deal because the firm believes that Taro will enable further Bitcoin adoption, as it potentially allows the unbanked in developing countries to send money using stablecoins. Not only do you have Lightning Network whereby you can send Bitcoin instantaneously from wallet to another, now you can send stablecoins or coins that are pegged to the dollar or the euro or whatever currency instantaneously as well. So let's say that an informal vendor in a third world country mainly deals in cash. However, they wanted a bank account. They cannot get a bank account because there are barriers to entry such as minimum balance, background checks, in terms of finances and all those things. But with the Lightning Network, and specifically because it now allows stablecoins, all they need is a mobile phone. This is all they need. And this will allow them to get into the digital economy without the use of banks. If, for example, they're selling clothes, let's say that they're selling a shirt for $2. Someone comes and buys it. They're like, oh, I don't have cash, but I have some USDT. Can I transfer it to you? Using the Lightning Network, all they need is two phones, one for the buyer and one for the seller. All the buyer needs is the seller's address, and they put it into the Lightning Network's application, and they instantaneously send the $2 at extremely low fees. Now they're banked without even being banked. And this is why Visa should be scared, because there are a lot of people out there. Everyone has a cell phone, but they can tap into the traditional system. So they'll obviously go and use crypto and now the Lightning Network. And stablecoins are now an integral part of the digital currency ecosystem and are slowly being accepted by global regulators. And the latest to give fiat-pegged assets the green light is UK's Economic and Finance Ministry, which intends to adjust the regulatory framework to incorporate stablecoins as a payment method. So a lot of people are thinking, hey, digital currencies are coming out, so this means that stablecoins are going to die. No, they're not. They're going to exist harmoniously side by side, which is my view. Stablecoins are too big to be taken down. There can be regulations that, manage how stablecoins are transacted, and this can be a good thing because it prevents money laundering, it prevents corruption, and it ensures that the companies behind those stablecoins have the necessary asset backing in order to back the stablecoins that are in the market. But it doesn't mean that it's the end of stablecoins. I think stablecoins are here to stay. The European Commission opens new consultation on digital euro. So the Commission will consult with industry specialists on issues concerning the digital euro, including international payments, privacy, the impact on the financial sector, and financial stability. They will also look at use cases alongside cash payments and also AML and combating the finance of terrorism rules. So they're looking at the framework as a whole, and they want to get everything ready in terms of a comprehensive regulatory framework before they actually launch a digital euro, such that it is a close to perfect digital coin. Not only that, but they're going to add additional legislative adjustments to the current EU legislative framework in order to allow the digital euro and other CBDCs from other countries to be exchanged, just like how it's done in the SWIFT system. But this has a lot of advantages. It's quicker, it's cheaper, and it's going to increase the efficiency of the global economy. Mairead McGuinness, the European Commission's finance chief, said in February that legislation on a digital euro will be proposed sometime in 2023. So I think 2023 will be sort of like a mid-year whereby legislation is finalized, it's perfected, and then maybe we will see the digital euro being launched in 2024. On some Solana news, Strata raises $1.5 million to build a no-code token launchpad on Solana. So they want to make launching tokens more accessible on Solana. Now it offers a no-code solution for people to launch and sell their tokens, as well as offer tokens in exchange for donations. This is a huge development for non-technical creators and radically lowers barriers to entry. A lot of the times, smaller creators or smaller developers don't have the chance to launch in Solana because of the stringent screening process that takes place, which obviously favors the bigger projects. And if you look here, most Solana launchpads or platforms that help people launch tokens requires each user to pitch their idea before they extend their services. So one example is that if you apply and you're selling a token that's going to raise about $3 million, they're going to court you. They're going to waive the fees. They're going to do everything they can do to get you to launch. But for people launching smaller tokens, like the ones that are used in pay-to-earn games, it's a harder sell. The vetting process, which is meant to select only high-quality tokens with trustworthy teams, can crowd out smaller projects. And Strata CEO and founder Noah Prince said that that's what upsets him, because how are you going to get any kind of composability and experimentation if you can't even launch your token? And this is a barrier to technical innovation, and this is a barrier to experimentation in blockchain. Experimentation, we all know what it means, but composability refers to the ability to combine and recombine components of a system, or in this case the Solana network, so that they can be used for different applications. It's like wanting to have a lot of differently shaped and sized Legos, because it's hard to build much if you have large blocks. And this makes sense because if you have a large Lego and you can separate it into smaller pieces, it means that you can recombine those smaller pieces into one large piece, but that large piece is now different to the initial large piece, which makes that application different than before. And this is where innovation in blockchain comes, right? Because if you have that ability for composability, then you can come up with a lot more iterations using the same building blocks. And this is what Strata is trying to do. They're trying to attract all of these smaller projects using no-code or low-code solutions so that it's easier for them to launch, it's easier for them to experiment, and it allows for more composability. And I think it's a great initiative by them. It will enhance the evolution of blockchain technology, and it will enhance the evolution of cryptocurrency in conjunction with that. So we come to the end of today's video. Thank you very much for watching. If you liked the video, please hit the like button, hit the subscribe button, share this video with your family and friends, and I will see you tomorrow for another video. Thank you for watching, invest wisely, and cheers.